Yo, welcome back to another day recap, and I changed my chart colors, if you guys can see. Um, so, we took an L today, and unfortunate as it is, but I'm starting to notice, I guess, a pattern um, in these sort of trades, but I'm still not really 100% on what I'm actually like missing out on. It's not that it was the model was bad or well today, as in today. It's not that the model was bad or there's no. I mean, technically, yeah, there was a draw on liquidity, but a high time frame one, so maybe that was why. But I can list a few other reasons, and just like yeah, there's a number of reasons. Okay, so let's just get started into the video. Daily, we've taken out all-time high at New York Open. 4 hour, there's not really much to see here. We tapped on this change of state, but that's really the only thing that I really noticed. We've also got this order block here that we did tap in to Asia, and then on the hourly, we have a order block here. I didn't mark that out, but I think I marked it out on ES. Let me see. No, I didn't. Okay, we have an hourly order block here, so I was expecting the price to push up from here once it taps into here. Also, again, it's all-time highs. I don't want to really get a buy up here because there is no drawn liquidity. We make SMT here with just these lows. We just have SMT here. Let me show you guys on the 15. Nothing really much to say on the 15. Actually, no. 15 showed us most. Hourly for body gap, 15 minute holding bullish. And then we had SMT at these lows, I think. Oh wait. No. Okay, so we had this hourly range here, and we tapped equilibrium at this candle here, tapped equilibrium, and I was looking for a long after that, so going scaling down to the 1 minute, we had changing the states here, no fair value gap, so there is no inversion to, or actually there is this tiny inversion, but it's too small. Inversions here, but on the 2 minute we have a fair value gap right here, so that's why I took it off. We have a change in the state of delivery here, with here's the sweep, and hourly fair value gap holding price higher. Also, yes, went into equilibrium, went to discount, and had SMT with these lows, I think. Let me take a look. Yeah, we had SMT with these lows right here. My chart does look really messy right now. Okay, we had SMT with these lows, and I was expecting this market maker sell to buy model to work out, but it didn't end up happening. So on the 2 minute, we had this change in the state. We tap back into it, which is where my order was. I'll show you guys on here. Here's your fair value gap. Here's your change in state. We come up here, and my stop was below this rejection block. So why is it at the rejection block, like just below 75%? It is because this wick is so like long, and because of that, it doesn't have to like stop at that body of the change in the state. So yeah, if you would have put the stop at the change of state, it still would have got hit anyway, and even if you put it below 75%, it would have got hit anyway. So around here, right, it would have got hit anyway. So yeah, I think this stop is just more safe. Yeah, so even if the stop was below the body, then it would still be valid. Like the trade would still be valid because we still have this rejection block. We still have this 2-minute change in the state, and it's still valid because it hasn't taken out that low. But I just like it to be a little bit. If the wick is big, then I'd like it to be a little bit at mean threshold or a little bit below that. So yeah, so 1 minute, had this market maker sell, and I was expecting a buy model here, but that didn't play out. Now, why is this so bad market conditions? Now, honestly, it's like framework wise, excluding time, it isn't that bad. Asia, like one of the reasons is Asia. We pumped at Asia, and yeah, that's basically it. We just pumped off Asia, and yeah, it's kind of that's the reason why it's kind of bad market conditions. We also have all-time highs. We took out all-time highs up here, so yeah, bad market conditions. Tomorrow actually looks pretty nice. If we form this fair value gap, let me take a look at ES. Yeah, it does look pretty bearish. Yeah, it looks pretty bearish for tomorrow. We had this 4-hour change in the state here on ES. We also got this inversion, so order flow has shifted on ES. So, and this is the sweep. That's the sweep, and probably targeting like equilibrium or something. Let's see. So daily here. No SMT, so technically we don't have to target equilibrium. Maybe we'll just come lower into this daily fair value gap and just consolidate there. Honestly, probably not looking forward to it, but yeah. Let's go to the performance of the account. So obviously I am trying to pass the account, so I'm not gonna be risking low. I'm gonna be leveraging as much as I'm comfortable with, which is like 500, 600. So about there. And yeah, so far I am on a losing streak. And to be fair, this trade right here is pretty it was user error, so like I kind of looked at it wrong. But these two I think have been perfect model wise, but framework wise these two are sort of mid. They're really bad basically, like actually not really bad, but not great. It's just mediocre market conditions, and it's just not clear at all. I also see this being AMD, but anything else that I have to mention? Not really. Well, yeah, we still have this fair value gap. Yeah, man. I mean, not really much to go over. If we get this inversion on ES, wait, unless there's a volume imbalance there, I don't think there is. Don't tell me there is. Oh my days, there's a 0.25 point volume imbalance there. I mean, to be fair, ES still has that 4-hour imbalance that has inverse, that 4-hour inversion right here. So maybe it's not that bad, but hopefully we get to see a dump here on NQ. Now, why do I involve the volume imbalance even when the wick has crossed consequent encroachment? Is just because like I've seen it happen. Like I've seen this be respected, and like yeah, I've just seen it be respected. So I've just been using that. But I will take into account if I am wrong about it, and it is an inversion, then I'll just journal that. But recently when I've been backtesting, or not recently, but when I have backtested, when I was backtesting, I've seen these sort of value gaps respect mean threshold. Oh, consequent encroachment. So yeah, I'm $290 away from blowing the account. Alpha Futures has released a new account type. I'll show you guys here. This is called the Zero Plan, and it's actually really really good compared to the other account types. And why is this? It's because of profit share, 90%. It just starts at 9% after you pass. Beautiful. Profit target 3k, normal, max position 3 contracts. Who's going to use more than 30 micros, right? Max loss $2,000, same. Payout weekly, which is usually pretty good. Normally it's bi-weekly, like 2 weeks, every fortnight. Minimum trading days 1 day, so you only need 1 day to pass the account. And the consistency rule, which is this, is qualified only. So when it's an evaluation, you can still full port or get more than 40%. But yeah, the consistency rule is 40% per of the account, and it is $99 a month. So yeah, I don't think there's anything else to talk about. If the framework is good tomorrow, and I see it's good, then I will definitely I'll buy another account and obviously risk the same with this. Don't really want to risk more than 1.5k. And there's no daily loss limit as well. Forgot to mention that. But alright, I think that's the end of the trade recap. Peace.